Most people fail at investing not because the market is unpredictable, but because they are. Their emotions are wild, their decisions are weak, and their mindset collapses at the first sign of red candles. Benjamin Graham didn't just write a book, he wrote a manual for surviving yourself, a blueprint that separates fools from professionals and gamblers from intelligent investors. Today, I'm not here just to summarize a book. I'm here to expose the truth that Wall Street doesn't want you to know, the truth about Mr. Market, the truth about margin of safety, and the truth about why 99% of people will never be wealthy, even though the map is right in front of them. This is not just an explanation. This is a wake-up call. If you're tired of guessing, panicking, and praying for luck, if you want to build wealth the way Warren Buffett did, then listen closely. Because once you understand what I'm about to tell you, you'll never see the stock market or your money the same way again. Most people enter the market like children walking into a casino, emotional, impatient, desperate. They don't invest, they react. They don't research, they follow. They don't choose assets, they chase FOMO. Graham saw all of this chaos and said something shocking for his time. An intelligent investor is not the one who beats the market. The intelligent investor is the one who never lets the market beat him, and that is where your journey begins. You see, the stock market is not a battlefield between bulls and bears. It is a battlefield between discipline and emotion. Most people lose because they think wealth is created by prediction. But Graham proved that wealth is created by behavior. He introduced the foundation of value investing, not as a trick, not as a strategy, but as a mindset, a way of thinking that gives an ordinary person extraordinary power. He taught investors to look at stocks not as lottery tickets, but as pieces of real businesses, with real earnings, real assets, real value. But here's the part that hits hardest. Most investors don't want truth. They want excitement. And excitement is expensive. Graham believed that anyone, yes anyone, could learn to invest intelligently if they had the courage to. Think independently. Ignore noise. Control emotion. Demand rationality. Choose discipline over thrill. This philosophy created two types of investors. 1. The defensive investor. Slow, careful, consistent. He doesn't try to outperform anyone, he only protects himself. He wins by avoiding mistakes, not by taking wild risks. 2. The enterprising investor. More active, more analytical. He seeks opportunities that others overlook. He doesn't gamble, he investigates. And you must decide which one you are, because the market will punish you brutally if you choose wrong. This part of the book isn't about stocks, it's about character. Your future wealth is not determined by your job, your salary, or the economy. It is determined by your ability to remain rational in an irrational world, and that is the first step on the road to becoming an intelligent investor. Every investor believes their biggest challenge is finding the right stock, but Benjamin Graham exposes a far more dangerous invisible enemy, one that stands right beside you every single day. His name is Mr. Market. And once you understand who Mr. Market really is, you'll understand why 99% of people stay poor, while 1% quietly become wealthy. Who is Mr. Market? Mr. Market is not a person. He is a metaphor, a character Graham created to represent the stock market's insane mood swings. Every morning, Mr. Market knocks on your door and offers you a price. Some days, he is euphoric, drunk on optimism. He will pay anything for garbage stocks. He believes every company is the next Amazon. He will buy from you at ridiculous, overvalued prices. Other days, he is depressed, hopeless, terrified. He will sell you world-class companies for pennies because he is panicking. He thinks everything is collapsing. He thinks the world is ending. And here's the catch. Mr. Market doesn't care whether his prices make sense. He only reflects his mood, never reality. This is the foundation of intelligent investing. Most people don't invest, they obey Mr. Market. When Mr. Market is euphoric, most people buy. When Mr. Market is terrified, most people sell. Meaning, they do exactly the wrong thing at exactly the wrong time. They follow the crowd. They react emotionally. They let Mr. Market manipulate their decisions. And Graham delivers the brutal truth. The market is here to serve you, not to instruct you. You are not supposed to follow Mr. Market. You are supposed to use him. Your wealth depends on one skill: emotional control. The intelligent investor does not trust prices. He doesn't assume a stock is good because it's rising. He doesn't panic because something is falling. He asks only one question: what is the company actually worth? Because when you know the value, Mr. Market's moods become irrelevant. When he is depressed, you buy from him. When he is euphoric, you sell to him. When he is normal, you ignore him. This single mindset is the difference between a gambler and an investor, a panic seller and a wealth builder, a follower and a strategist. Most investors behave like passengers on a stormy ship, screaming, panicking, reacting to waves, but the intelligent investor stands calmly at the wheel because he understands something others don't. Volatility is not the enemy. Your reaction to volatility is the enemy. Fear and greed, the weapons of Mr. Market. Mr. Market uses two weapons to control you. 1. Fear. When global news turns negative, when recession talks begin, when stocks fall 20-30%, most people run. They sell everything. They lock in losses that could have become fortunes. But the intelligent investor smiles because he knows fear creates discounts. 2. Greed. When a stock is meme pumped, when social media screams, buy, buy, buy. When everyone says, this time is different, most people jump in late and lose money. But the intelligent investor stays calm. He knows greed creates bubbles, and bubbles always burst. The secret power: patience. Mr. Market is impatient. He wants action every day. He wants noise, excitement, drama. But Graham explains a truth that separates legends from losers. The intelligent investor is patient when others are restless. Patience is a superpower. Patience lets you buy undervalued companies. Patience lets you hold while others panic. Patience allows compound interest to work its magic. Most investors destroy their wealth by touching it too often. The intelligent investor builds wealth by waiting. Final message of Part 2. Once you understand Mr. Market, you unlock the investor's cheat code. You don't have to predict the market. You only have to avoid becoming its victim. Use Mr. Market's fear, use his greed, use his irrationality. Because he is not your master, he is your servant. And when you learn to control your emotions, you will control your financial destiny. Every great investor has a secret weapon. Not luck, not timing, not insider information. The real weapon, the one Benjamin Graham built his entire philosophy on, is something almost nobody uses, even though it's simple, powerful, and nearly foolproof. That weapon is the margin of safety. What is margin of safety? Imagine you're crossing a bridge. If that bridge can support 10 tons, would you drive a 10-ton truck across it? Of course not. You would want a safety margin, 5 tons, 3 tons, anything that gives you room for error. Investing is the exact same. Your margin of safety is the gap between a company's true value and the price you pay. If a company is worth $100 per share and you buy it for $60, you have a large margin of safety. If you're buying it for $98, you're gambling, not investing. Simple principle, almost magical results. Why margin of safety creates automatic protection? Graham understood a brutal truth. Humans make mistakes. Markets behave unpredictably. Companies face risk. The future is uncertain. No one, not even Warren Buffett, can predict what will happen. So instead of trying to predict, you prepare. Margin of safety protects you from misjudging a company's earnings, sudden recessions, management failures, temporary price crashes, market overreaction, your own emotional mistakes. It doesn't make you immune to losses, but it reduces them and maximizes your upside. It turns uncertainty into opportunity. The illusion of precision. Most investors fool themselves into believing they know exactly what a company is worth. They build fancy spreadsheets. They create complicated models. They use formulas that look intelligent. But Graham calls this out as a dangerous illusion. You don't need perfect precision to invest. You need a margin of safety. The intelligent investor does not aim to be perfectly right. He aims to never be disastrously wrong. The difference between these two mindsets is the difference between wealth and financial ruin. How do you find margin of safety? Graham gives 3 powerful methods. 1. Look for undervalued companies. If a company is trading at a discount to its true value, earnings, assets, cash flow, book value, you get a built-in safety net. It's like buying a $1 bill for 60 cents. Even if you're slightly wrong, you still win. 2. Avoid overhyped stocks. High-growth stocks with sky-high PE ratios, companies priced for perfection, these are landmines. All excitement, no protection. Margin of safety disappears completely when you buy hype. One mistake, and you lose everything. 3. Buy financial strength, not drama. Graham insists on companies with strong balance sheets, stable earnings, low debt, long track records, durable competitive advantages. These aren't the companies that go viral on social media, but they're the ones that quietly make investors rich. Why most people ignore margin of safety? Because it's boring, because it requires patience, because it prevents gambling, because it kills excitement. Most investors want adrenaline, not wisdom. They want quick profits. They want shiny stocks. They want to feel clever. Margin of safety doesn't care about any of that. Margin of safety cares only about one thing: protecting your money first and growing it second. That's why Graham's disciples, Buffett, Munger, Klarman, became legends. They used this simple rule to build empires. The psychological power behind it: when you buy with a margin of safety, you instantly gain emotional confidence. You don't panic at dips. You don't fear corrections. You don't sell in a crash. Why? Because you know the company's real value is far above the price you paid. Mr. Market can scream. The crowd can panic. Prices can drop. But you remain calm because you bought wisely. This is how fortunes are built quietly while the world is busy reacting loudly. Final message of Part 3. Margin of safety isn't just a rule, it's a philosophy. It's a shield. It's your guardian against stupidity, both yours and the market's. Most investors try to be brilliant. The intelligent investor tries to be safe. And, ironically, that's exactly what makes him brilliant. Congratulations. You've just walked through the mindset that separates ordinary investors from legends. We've uncovered how most people are their own worst enemies in the market. Why Mr. Market is not your friend but a tool if you learn to use him. The power of margin of safety and why it is your ultimate shield. Here's the truth. Nobody wants to say out loud, wealth is not about luck. It's not about timing. It's not about hot tips or trending stocks. Wealth is about discipline, patience, and emotional mastery. It's about building habits that survive crashes, recessions, and panics. It's about seeing value where others see chaos. Benjamin Graham didn't just write a book. He handed us a manual for freedom. Follow it. Apply it. And you won't just survive the market, you'll thrive in it. Remember, the market is emotional. You don't have to be. Master yourself, master your money, and the world will reward you silently, but enormously. So take action. Be patient. Respect the rules. Ignore the noise. And one day, you'll look back and realize you didn't just invest in stocks. You invested in yourself. This is the Nordic Investor, reminding you, be smart, be patient, be relentless, and always stay intelligent in your investing.